Welcome back to Stocklabs Market Recaps. We are 3/4 of the way through May, so had monthly option expiration day on Friday, and the market overall this week basically blasted off. The Nasdaq has kind of become like sort of an up only index. That went up Monday to Thursday, and then closed down a little bit on Friday, but still, I mean, everything is kind of at highs. As far as the Nasdaq is. Rest of the market did pretty well too this week. So Qs were up 3.5%, IWM up almost 2%, S&P up 1.7, and the Dow flat-ish, up 0.3. Crude oil bounced a little bit after getting kind of crushed the week before. Bonds took a big step back, especially on Friday. Not sure what was going on with rates, if it's, I don't know, fears of default or something like that. But, the TLT is really, or, it could just be that, the recession worries are backing off. So, as growth gets priced back into the market, the bonds, back off. But, credit was also down. Generally, you'd see HYG up if it was kind of like the economy was looking to be on an upswing. But, I mean, at least this week, bonds and credit both down, equities all up. So, we're still seeing that a lot of the heavy lifting is being done by our sort of just gigantic tech companies that everybody knows and has owned over all of these years. Nvidia was the outperformer, up 10% for the week. Netflix also up 7.5%. Tesla up 7.25%. Amazon up 5.5%. Facebook, Meta up 5%. Google up 4.5%. Microsoft up 3%. Apple was the laggard, only up 1.5%. So big week for this group, 5.6% to the upside collectively. If you just own basically these stocks, you're crushing it this year. So, some of these are up, Nvidia up 115% for the year, Meta up 100% for the year. We're only in May. So, who knows what's going on with these. The rest of these, kind of, okay. Tesla is up 46%. The rest are kind of in line, in sort of the range of just the Qs for the year. I mean, they're outperforming, but the Qs are up, 25 or 30%. So, this is the group doing all the lifting. Small caps have sort of picked and choose when they participate, but overall, they're kind of just in a choppy area still. If you look at breadth for our industries, once again, you see breadth is kind of, I mean, it's green, but broadly speaking, okay, tech breadth was up 2.5%, which is slightly worse than the Qs. So, like we said, the median tech stock is not performing up to the index. The index is being dragged by those gigantic companies, which make up the majority of the index anyway. So, services up 0.9, industrials up 1.5, healthcare flat, financials up 0.75%, consumer flat, and basic materials caught a bounce up 1.2%, with crude up a little bit this week. Subsector wise, we do actually have some pretty good breadth here. In the subsectors, there are several that are up over 5%. We have a lot of semiconductors on here. So, the semiconductor index has kind of caught a bid alongside the NASDAQ. Even some of these regional banks, you see them popping up on here now. So they bounced even this week. They've sort of been the problem sector for the year, basically. With a lot of stress in the financial system due to whatever rates or how individual companies have managed their books and all of these things like that. But yeah, we've got some good stuff. I mean, it was a broader rally this week than it has been in some of the other weeks that we've seen. I mean, even though breadth appears to have lagged a little bit this week, like it has almost every week for the last month and a half, it was better this week. So, that's a little bit of a positive sign for the market. If we look at breadth by market cap, if I can find my screen. Let's see, 1 to 5 billion, up 1.93%, and 5 to 10 billion, up 1 3/4, 10 to 50 billion, only up 85 basis points, and mega caps up 67 basis points, and terra caps, okay, up 1.5%. So yeah, the concentration is in the large stocks, whether it's the large tech stocks or even just, these are like, this includes all industries. People are hiding out in the giant companies. So they want market exposure, but they don't want to speculate on like anything smaller that, basically doesn't have a giant balance sheet or isn't sort of massively free cash flow positive, like these sorts of things. So that's where the money is going. Anything else, you're kind of just guessing, or not guessing, but you're kind of just you're taking more of a risk on the smaller stuff right now because it's just those aren't the sorts of companies that investors are wanting to buy. So right now, big tech or big companies is kind of the only game in town right now. I mean, it really makes the market sort of thin. And then if these companies sell one day, I mean, it ends up just being a big down day in the market since they're the only ones that were ever up the whole time. But it is what it is. So if we look at this week's intelligence, it's not a whole lot on here. Got gold miners bullish, Turkey ETF, Turkey the country, by the way, and inverse big banks. So maybe banks pull back something. I don't know, but there's not a lot of results on here. So let's see on the downside what we have on here. And let's go high to low. Okay, VIX bearish this week. I mean, VIX has just been destroyed over the last, it's basically gone down in a straight line ever since for the year, more or less. We're like 5 months into the year. So even on weeks where the market has fallen, the VIX hasn't really done anything for you. So, I mean, you're sort of back in one of these stages that tend to last long periods of time where the VIX kind of just grinds lower, and everybody that buys puts watches them evaporate, and that's just how it is. Boyle bearish, and we've got coin bearish. Short Russell is bearish, so bullish Russell. Okay, but I also see Tizon here, which is bearish Russell, so unclear on, like I said, small caps have been very choppy. Dow Jones Internet bear is bearish, so bullish Dow internet stocks. Not sure again what that includes, but okay, UVXY also bearish with VIXI, and regional banks are bearish. Biotech is bearish, and PayPal is bearish. So, I mean, kind of looks like it's going to be a bit of a choppy week. Not sure if there's any. I mean, we do have kind of this debt ceiling overhang, but um, even if that sort of hits some problems, I mean, the market has so much momentum right now that likely you're just going to see people treat it as a buying opportunity anyway. So we'll see how that goes. Again, we'll be seeing some news on it. I know the deadline is creeping up. Yellen was saying on Friday or Saturday that Treasury is going to quote unquote run out of money. And yeah, so everyone's just waiting on the deal, basically. For this week, probably you can just keep playing the momentum. I mean, especially in the NASDAQ, every single dip that comes is bought. So, basically you can use almost like, I don't know, prior day's low. And if that low doesn't break, then it's going higher. So small caps are a little tougher. S&P has been more back and forth. But again, if the NASDAQ is marching higher, at the end of the day, the S&P will follow it. And that's basically it. So I would think like kind of a choppy week, especially early in the week, like Monday, Tuesday. We'll see where things get pushed around to. But yeah, overall, I mean, it's the summer months. So you're not going to see anything too dramatic happen, especially as everyone's winding down their sort of trading operations to hit the beach for the summer. So yeah, that's basically it from me. Hope you guys have a good week out there, and we'll talk next week. Bye.